Hello, everybody. In this time, we are talking about corporate strategy. Corporate strategy takes a portfolio approach to strategic decision making by looking across all of a firm's businesses to determine how to create the most value. In order to develop a corporate strategy, firms must look at how the various businesses they own fit together, how they impact each other, and how the parent company is structured in order to optimize human capital, processes, and governance. Corporate strategy builds on top of business strategy, which is concerned with the strategic decision making for an individual business. And then we move to types of corporate strategies. There are some types of corporate strategies you can implement into your business. The first, growth. A growth strategy is a plan or goal for the company to create considerable growth in different areas. It could refer to overall growth, but it could also encompass only specific areas such as sales, revenue, following, or company size. Companies can accomplish growth strategies through concentration or diversification. Concentration refers to a company developing the core of its business, such as a bookstore investing in selling more books. Diversification is when a company enters new markets to expand its business. And then, second, reinvention. Reinvention strategies are when a company reinvents or redesigns an aspect of the business that may be old or irrelevant. The company might update it with new designs, technologies, or products. To accomplish this strategy, a project manager could reinvent a function by significantly changing a good or service. An example of this could be converting a physical store into an online store. And then third, stability. Stability strategies refer to a company staying within its current industry or market because it's already succeeding in its current situation. This strategy maintains the company's success by continuing practices that work for the company. To do this, the company might invest in areas in which they are doing well, such as customer satisfaction. For example, the marketing team might create advertisements with coupons on them to send to customers to further improve customer appraisal. And then we move to key components of a successful corporate strategy. The first component, vision and mission statement. The vision and mission statements are the cornerstone of any corporate strategy. The vision statement encapsulates the company's long-term aspirations, where it aims to be the future. It's a forward-looking declaration that inspires and guides the organization. And then second, implementation plan. The implementation plan is a detailed roadmap for executing the corporate strategy. It outlines the specific actions, timelines, and responsibilities required to achieve the strategic objectives. And then third, core values. Core values represent the ethical and cultural foundation of the organization. They are the principles and beliefs that guide the behavior and decision-making processes within the company. And then fourth, market positioning. Market positioning is the strategy a company uses to differentiate itself from competitors and establish a unique identity in the minds of customers. It involves defining the company's value proposition, what makes its products or service, stand out, and communicating this to the target audience. And then fifth, the strategic objectives. Strategic objectives are the specific, measurable goals that the company aims to achieve within a defined time frame. Typically, over the next 3 to 5 years. These objectives translate the company's vision and mission into actionable targets. They cover various aspects of the business such as financial performance, market expansion, customer satisfaction, and operational efficiency. And six, growth and expansion plans. Growth and expansion plans outline how the company intends to increase its market share, revenue, and geographical presence over time. These plans might involve entering new markets, launching new products, or acquiring other businesses. And then we move to difference between corporate strategy and business strategy. There are a few notable differences between corporate and business strategy. A corporate strategy looks at the larger structure, that is, the mother company, its various business units and products, how they connect, and the overall brand. It seeks to identify the markets to enter and the products it may produce. A business strategy only focuses on the individual business unit and how to grow its profits or get a bigger share of the existing market. A corporate strategy has a much wider scope compared to a business strategy, which is limited to a specific product or market. The business strategy usually complies with the goals of the corporate strategy. A corporate strategy is very important, as it can help indicate the future success and health of the company. I think it is enough for this session. Thanks for watching, and don't forget, give this channel with your like, comment, subscribe, and share. Thank you very much.